COVID-19 might be weighing heavily on the minds of investors, but investment firm Temasek Holdings says it still sees opportunities in trends accelerated by COVID-19. Its investments in financial services, healthcare and life sciences sectors are recording increased activity due to the pandemic. Brendan Tanoto tells us more.
Temasek Holdings' net portfolio value dipped to $306 billion as it closed its financial year amid the pandemic. That's a 2.2% drop from the record $313 billion it posted a year ago. Its one-year shareholder return also slid into the red, coming in at minus 2.28% compared with the 1.49% gain a year ago. Temasek's limited exposure to battered sectors like hospitality and travel helped to contribute to its portfolio's resiliency. Financial services remained the biggest sector in its portfolio as it increased exposure in the payment sector to benefit from the faster pace of digitalization of financial services. Temasek was also active in the tech, healthcare and life sciences sectors over the past financial year. The firm says capitalizing on growth trends in these areas will continue.
For example, telemedicine is very relevant since we have to stay away from each other. E-commerce have definitely benefited from it. So we believe that such pandemic have actually accelerated in this development for the trends that we have been investing.
Asia remained the anchor of Temasek's portfolio, with China and Singapore remaining the top two markets, though its China exposure surpassed Singapore. But that, Temasek says, is mainly due to the valuations of both markets.
We also recognize that the China market is a much substantial market than Singapore. So it is inevitable that the Singapore overall portfolio will be less relative to China and, in fact, the US market in times to come. Having said that, these are investment portfolio by underlying assets. If you look at the Singapore assets as a domicile, it actually still account for 50% of our portfolio value.
Still, the firm says it remains committed to investing in Singapore. Looking ahead, Temasek says the outlook for the global market remains volatile and uncertain, with the resurgence of COVID-19 infections in some countries threatening to derail recovery. US-China trade tensions is also a concern.
The uncertainty around business growth because, say, US companies are investing in China or Chinese companies investing into the US, their opportunities might get more limited, and that will, of course, affect any investments that Temasek might have in those companies.
Nonetheless, Temasek says it will remain watchful and disciplined in its investment approach as it focuses on building a portfolio that will benefit from policy tailwinds and is resilient in the long term.